David, who better to help us understand what's going to happen next at the ECB? I've just finished a conversation with Jean-Claude Roche, the former ECB president. He says, look, Christine Lagarde made the right move here, a 50 basis point hike, dropping forward guidance, saying the ECB is going to be data dependent from here. What's your view?
Well, different. I think the fault, and it's a fault line in the way that the ECB does things, is that it looks backward. What Lagarde said was that the financial stability is an input to the overall policy. The overall policy, however, is set by things that may not reflect sufficiently financial instability. And that is, for instance, underlying inflation, it is current inflation, and it is, of course, the transmission of monetary policy. These things pick up financial instability very slowly. The reality is that what Lagarde has said is she will do something about financial instability if it happens, but she will not predict or act in any way in advance of it. Now, that's exactly what central bankers did in the great financial crisis, and it depends upon your faith that the central bank economists will pick all this up and predict it accurately and tell her what to do about it, and then she will do it. I consider that rather like driving a car, not looking in the rearview mirror, but actually facing backwards. And I think it's not the right way to go about what is obviously an environment of extreme leverage, with increasing cost of leverage, which is causing failures and will cause increasing failures.
You know, on the flip side, though, it is critical that investors and governments have confidence within the central bank to mitigate some of these risks, to ensure and protect financial stability. So by sticking to the script and going ahead with this 50 basis point hike, isn't Madame Lagarde doing that, ensuring confidence and firming up credibility within her own standing at the bank?
Oh, of course, all of that. But of course, the same flock of sheep had confidence in central bankers when they were printing money ad infinitum, generating inflation, and then doing nothing about it until it was out of control. So, I mean, having confidence in them and smiling from podiums does not necessarily mean that they're right. The point I'm making is that the mechanism for being right is not backward-looking. It is not reacting after the events have shown up in their data-dependent antennae. It is by acting with precedent in advance. And you can see the stresses in the system all around. The fact that the Swiss could shovel billions into Credit Suisse and keep it afloat did not solve the problems of Credit Suisse, nor overnight were the problems of the New Republic Bank solved by shoveling another 30 billion into it. The point is that leverage is coming home to roost. And when you pursue monetary policy, all central banks must pay attention to both the stability mandate and to their inflation flight. And I think what Lagarde is saying is the inflation flight is everything, and the stability mandate is a small contributor. Well, that will reverse. I'm saying that is simply not correct. So I don't join the team in having this docile kind of confidence in their ability to handle this crisis more efficiently than they've handled all the other ones, which was very poorly.